FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 5/22/2020. Well, are you surprised the market's going up? Has it defied your expectations? It certainly has defied the expectations of the so-called experts out there. We can't deny that. And where's it going to go from here? Who are going to be the winners? Who are going to be the losers? In every market, there are winners and losers. Your key is to pick the winners and stay away from the losers. And that's why we are talking to Crista Huff right now. And you can find her work over at cabotwealth.com. Crista, it's great to have you back on. What do you make of the market?
Thanks, Kerry. It's good to be here. Well, we have a very interesting market. I've been telling people all year that we should expect a trading range the whole year, meaning the market goes up, then it falls back down, then up, then down. So we're in an up cycle right now, but people should not fool themselves into thinking that everything's okay.
All right. So you're thinking there'll be a further decline?
Absolutely. We could possibly retest the March lows this year, and depending on what kind of news comes out, the market could go lower than that. I'm just telling people, be prepared for constant fluctuations.
So a possible retest of the March lows, and that was pretty disastrous. We've made it back a lot of them. It looks like 25,000 on the Dow, for what that's worth, is resistance. But the NASDAQ has gone higher. The Russell 2000 all have shown unexpected strength, haven't they?
They have. I think that has a lot to do with investors, and not just investors, but the folks on Wall Street tend to be optimistic in general, and most people don't have good foresight. They can't take a number like the current unemployment figures and then extrapolate, okay, where will that lead? But the answer to the question of where it leads is the key to your investing future, and that's why you and I are talking today.
All right. So where is it going to lead? We've seen unemployment went up close to 2.5 million this week, but just like the coronavirus chart, if you will, has peaked and is now declining, so too unemployment?
Well, there are about 38.6 million Americans who filed for unemployment benefits in recent weeks. Now, that is a tremendous number of people, and these are not all folks who stand at the counter at Target or at McDonald's. A lot of these people are middle and higher level career people who had significant salaries, and they support families, and the job market is going to be relatively dismal. All these folks are going to want to come back to work, but many, many businesses have been announcing that they're permanently closing. Even just yesterday, I think, L Brands announced that they're permanently closing 250 retail stores of Victoria's Secret and Pink. And that's just, one little tiny example, because we're hearing this about other retailers, we're hearing it about restaurants, we're hearing it about other industries. And so you've got all these people who are going to need jobs, but there are going to be fewer and fewer jobs available. So the real question is, what happens when there's a family with a husband, a wife, and 2 kids, and they had been taking ballet lessons and been on a travel hockey team and been having annual vacations and such, and suddenly they're unemployed and can't find work? That is what's going to lead to not only a recession, and I hate saying this, but I believe we're going to be entering an actual depression.
All right. But on the other hand, we've got trillions of dollars of liquidity splashing around the markets, the country, helicopter money, people, PPP, stimulus, round 1, no doubt there'll be a round 2, probably around 3. Is that going to help alleviate this and help push up demand, or is it just kind of, I don't want to use
in the short term, it's propping up markets, right? I have a relative who is receiving all those unemployment monies because he has temporarily lost his restaurant job. He's literally taking home more money than I am right now by not working, and he's funneling it into the stock market. He can't possibly be the only person who's doing that, right? But eventually those benefits will run out, and all the money that's propping up the stock market will fizzle, and then the reality will set in. The not only the unemployment figures, but people will run out of money to pay their car loans, their home mortgages, their credit card bills. We're going to start hearing a lot about that from the financial companies. Eventually, people will say, look, we can't afford to live in this house anymore. We just don't have the money coming in to pay the bills, and they're going to go move into their mom's basement or their sister's house or whatnot. They're going to move their entire family. They're going to sell their house. It's going to depress the housing market. I expect this to last for years.
Yeah, so it's going to last for years, and so where's the way out? How are we getting out of this mess?
Well, first of all, we have to stop electing the kind of people who thought the lockdown was a good idea. All right, because the lockdown caused this entire disaster. So the people who were naive enough to think that you could just turn off commerce and then flip the switch back on in 4 months, never elect any of those people ever again. There are young people who, like my kids are all around age 20, right? They're not going to see the lifestyle that they had in their teens. They're not going to see that again maybe for 20 years, maybe just 10 years. But still, they're certainly not going to see it in their 20s. They're going to be competing with another 30 to 40 million people who are looking for decent jobs, not just standing at the counter at McDonald's. And those jobs are going to be extraordinarily hard to come by. And so they might be postponing marriages, certainly postponing having children. If they can barely pay their rent, how on earth are they going to pay for children, pay for mortgages, et cetera? So, it's ugly. And my subscribers at Cabot, there are lots of them, and they're like, Crista, I've never seen you so pessimistic. You're usually so optimistic. And my answer is, I'm not a pessimist. I'm a realist. If all you have to do is look at the numbers and say, okay, what happens if these people can't find jobs? And it's staring you in the face. I'm not inventing, the consequences of not having a job. Most of the people out there have experienced unemployment, and they know darn well what happens when you don't have income.
Yeah, it's not an easy task ahead. And this is all the more reason why everything we've been taught in our society, from the media, economics, all wrong. You should have been living under your means, beneath your means, rather than beyond your means. And I guess it's going to be a good time to be a bankruptcy attorney, huh?
Right. And I wouldn't really want to own rental property right now or commercial real estate. So let's talk about which industries are likely to thrive so that people know where they can invest in the stock market, and then which industries are probably going to suffer so that they can carefully avoid or maybe even buy bearish ETFs on those industries, or maybe buy puts on some of those companies. So there are always ways to make money. So let's get optimistic now and talk about how can we make money in this environment.
Okay, so that's a great point, because like I said, there's winners and there's losers in every market. And if you can figure out the pathway and project the trends accurately, then you too can become a winner or stay a winner. So what industries profit?
Okay. Every industry that contributes to the hardware, software, services, and entertainment that comes through your electronics, those will survive. We're talking about televisions, tablets, cell phones, radio. So whether it's Netflix creating movies that comes through your TV, or it's NVIDIA that enhances the graphics on your computer games, all of these companies are going to survive because despite the fact that people might be unemployed and they're home and they're morose, they're still on their phone, they're still on their television, right? So as long as those companies are profitable to begin with, certainly consider investing in them. I always start with earnings growth. So if the company is losing money, no, avoid it. It's not losing money because of coronavirus. It's losing money because of poor management, right? But there are many profitable companies in those areas that people can buy. Other timeless industries that people will continue to put money towards will include like food and household expenses like paper towels and such, and pharmaceuticals. They're going to need their medicines. They're going to need their Band-Aids, right? And there will be areas that will suffer. If people are unemployed, eventually they're going to have trouble paying their rent. So I would avoid commercial real estate that invests in apartment buildings. In addition, there will be, with all the businesses that are closing, commercial real estate that invests in retail properties will probably suffer. And then in addition, lots of thriving businesses are now discovering that they can have lots of employees work at home and they won't need as much office space. So even in that regard, commercial real estate will have lots of vacancies. So whereas in the last few years, I invested heavily in alternative asset managers that typically own these kinds of commercial properties, I'm not owning any of those for the time being, and that would include Blackstone Group and Apollo Global Management and such.
Okay, so one thing that the government is doing here that it didn't do in 08 and 09, you're seeing massive moratoriums across the country on foreclosures and evictions. Now, on the one hand, that's good, stops people from becoming homeless, losing your home, all of that. But on the other hand, it doesn't let the market flush out the speculation, over-speculation, and the malinvestment that took place during the past 11 years. And the flip side of the lack of evictions, if I am Joe America, right, Mr. and Mrs. Joe America, and I have money to save for my future, some people put it into stocks or bonds, but other people buy a couple of rental properties and they count on the real estate to grow in value, and they count on earning a little extra profit each month from the rental payments. So maybe someone pays $1,300 a month in rent. They the landlord throws $800 towards the mortgage and sets aside the other $500 towards their family's expenses. But also, when the renter moves out, they have to spend that money to do new paint, new carpeting, and God forbid the rental person was, a jerk and destroyed things. They have to set that money aside to fix the appliances and such. So when the renters are told that they don't have to pay their rent, when the government says that, the landlord, Mr. and Mrs. Joe America, suddenly doesn't have the money to pay their mortgage on that property, let alone support their family. So you might say, well, we're saving the renters from homelessness and from bankruptcy, but we're not saving the landlords from homelessness and bankruptcy. So this is a disaster, on a big level. Yeah, it's a complete disaster. And that's the problem when the government sticks its nose under the tent. Look, in this situation, what would happen is I'm a good tenant and all of a sudden I can't pay. My landlord knows this. So I call up my landlord and I say, look, or the landlord calls me, I can't pay the whole thing. What can you pay? And you work out a deal. And then you say, either you just forgive the balance, or you say, we'll go for a year and then we'll adjust the rent accordingly, or 6 months. But here, the government has just given these renters a complete out. And many of these renters are making more money on unemployment, like you said before, getting the extra $600, which they'll probably extend per week. So they're actually making more money and they could afford to pay their rent. And the same with their car payment and mortgage payments, all of this. So the government's sticking its head in here and saying, don't pay. And then saying to the landlord, if you have a mortgage and it's federally insured, you can get a deferment too. it's not really solving the problem.
FSN Radio. It's all about what's next.
Financial Survival Network is brought to you today by Orin Resources, a junior exploration company with the appetite of a major. It's hot on the trail of the next globally significant discovery, creating enormous potential upside for you, the shareholder. Orin is one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. Orin's unparalleled technical team and highly experienced management has a history of success in advancing and monetizing exploration assets. No wonder Orin's been called one of the best in the junior exploration sector. Orin trades on the TSX and the NYSE under AUG. To learn more, go to orinresources.com. That's AURYN resources.com.
The Financial Survival Network. It's all about what's next.
No, it's just postponing a problem, which is why, as we're seeing the stock market rebound right now from the March lows, there are naive people out there who think, oh, everything's going to be okay. No, there are so many problems that will be unfolding. For instance, let's go back to Mr. and Mrs. Joe America, and they're unemployed, and they're going to start job hunting, right? Well, right now, they might be optimistic. They might literally be thinking, ooh, business is opening up. I'm going to get another mid-high level executive job. Well, 6 months from now, they still don't have that job, right? And meanwhile, they've been paying all their bills from their savings, and they've been tapping into their 401k that they rolled into an IRA, right? Well, eventually, they're watching that IRA dwindle rapidly. And then they're looking at their house, and they're like, do I spend all the IRA money and then tap into the home equity? Or do I put the house up for sale? And in the meantime, they're looking at their bills and they're saying, maybe I should stop paying on this car loan. Maybe I should stop paying on the mortgage. So those rampant problems where people suddenly are no longer paying their car loans and stuff, that is to come months down the road, because right now people are still paying those things, juggling their money, thinking I'll get a job. So as people fail to get jobs in the next 3 to 12 months, that's when the crisis hits on people not paying on their loans. And that'll be a lot of bad news that'll be in headlines. And then people will start selling their bank stocks, their credit card company stocks, et cetera. And that's just one little facet of everything that's going to come when people don't have jobs and income. So I think that this problem is going to keep hitting the stock market over and over again as different kinds of economic statistics get worse and worse.
All right. So housing, but on the other hand, everybody needs a place to live, right? So multifamily housing, for many, that's the best option. And are they just going to become homeless? What's going to happen here?
I think we're going to see a long-term trend of multi-generational families and groups of friends living together. Whereas right now, if I have 3 adult daughters, one of them might live alone, 2 of them might live with one friend. In the future, I think you might have 1 or 2 of them staying with their parents and one of them living with 2 or 3 friends. I think basically people are going to consolidate so that they lower their monthly payments on housing simply because, maybe they're smart, maybe they got college education, maybe they're actually great employees, but they literally cannot get a job that can support them living alone in an apartment and stuff. So people are going to downsize. They're going to find cheaper ways to live. And frankly, if you're like a middle-class American, so I'm not talking about like people who live on the edges of like people who live in bad neighborhoods. I'm not talking about that. I'm talking about, the bulk of America who live in decent and safe neighborhoods. If they stop paying on their mortgage and decide I'm going to go get an apartment, the apartments actually cost more per month than their mortgage does, because I've been in this situation. I know what apartment rates cost. My ex-husband pays much less on his house than I pay on my rent, and I live in a tiny place and he lives in a big place. So selling your house and going to an apartment won't necessarily be the answer. I think people are going to literally have to live with relatives if they are unemployed, because they're not going to find any other way to juggle this.
All right. So talking about winners and losers, the gig economy, your Ubers, your Airbnbs, Upwork, all of these different things. Is that going to come back, or is that just was that a fad that's going to rapidly diminish?
Well, the Airbnb situation is probably going to be ugly for a while because the less spending money people have, the less likely they're going to go anywhere, especially vacations. So there's going to be fewer people traveling, fewer people renting little vacation spots for a week here and there. So Airbnb isn't probably the best place to invest or to own property right now. With the whole Uber thing, there's probably going to be a continued uptick in people ordering things that are delivered to their homes. And because there are a lot of people who are actually afraid of the virus, afraid of going out in public. I'm not one of those people, so it's very hard for me to imagine.
Same here.
Yeah. And a lot of that has to do with, I don't watch TV, and to a large extent, I don't listen to radio. So I haven't been exposed to all the fear mongering, which I believe was done purposely to Americans. And so there are a lot of people who are terrified. And coincidentally, these are the same people who watch a hell of a lot of TV, right?
Yeah, too much.
Yeah. So it's really hard for me to imagine that fear, but I know it exists. And so a lot of those people, they're not going to be traveling. They're not going to be going on vacation. Forget about airlines. I'm prepared to buy puts on airlines for several years, and I think we're going to see at least one or two major U.S. airlines go bankrupt. Now, granted, they might get rescued from bankruptcy in some way, shape, or form, but I think that's where the airline industry will be heading, and almost anything else that involves larger groups of people gathered together, such as restaurants and Disney World and such. Not that I think Disney will go out of business because they have so many other areas of business. But it's just, it's so unfortunate, and it was so unnecessary and so avoidable. And if anybody had me on a committee, or you and me both on a committee that said, should we do lockdowns? You and I would have said, hell no. And we would have given them 20 reasons that was a bad idea. But now it's been forced upon us, and not only forced upon us, but now people like ourselves who are trying to warn people, look, this was a bad idea. These are going to be the consequences. They're trying to alienate us and say, like, you and I are the bad guys simply because we're telling the truth.
Yeah, I've been warning people, Crista, since the last Great Recession, the so-called Great Recession, which I think we never really got out of, but that's another story, that the next one was going to be far worse, never having any idea that there was going to be a pandemic that would trigger it. But these markets were a balloon in search of a pin, and they found it in the form of COVID-19. But it would have happened, no doubt, down the road, probably after the election, when maybe there'd be a little bit less liquidity involved. So here's the thing. Do you buy a house now for like no money down, or do you wait? Do you wait for owner financing? I think we're going to see owner financing come back in this market, because you're just not going to be able to get rid of your house because I think eventually mortgage money is going to be choked off.
Right. And we already had a long-term downtrend on home prices that was looming. It hadn't started too much yet, but because we have this huge group of baby boomers who would naturally be downsizing during the next 15 years, they're selling the big houses that they raised their children in. They're moving to single-level homes, small homes, homes where they don't have to take care of properties. So we were already going to have a flood of these bigger homes on the market during the next 15 years, and with far fewer buyers, because demographically, younger people, right? They're not buying the bigger houses. They're not buying houses nearly as much as people from my generation did. So now we're doubling down on that housing problem, because we have a whole new group of people who will also be selling, the jobless people. So let's say the flip side. Let's say you're a person who has money to buy a house. You didn't lose your job. Maybe you're lucky and you work for the government or a union, because frankly, this whole jobless thing hit the private sector, massively more than anyone in a government or a union job. I'm not saying those folks won't or didn't lose their jobs. I'm saying the private sector got the bulk of this difficulty.
First.
So now let's say you're a government economist. You've got lots of money. You're not going to lose your job. You want to buy a house and you want to get the best possible deal on it. I'm thinking you wait a little, let the housing market start to fall. And then at that point, you're going to get a bargain.
Yeah. Well, where I'm renting now, and I just couldn't find anything to buy. So I guess I got off easy. But where I'm renting it, it's owned by a Chinese investor. And I specifically said, well, if they follow their examples of the European investors and the Japanese investors before them, I'll be able to buy this thing for a song once the crash hits China and they need their money back. And
right.
And that's, history just keeps repeating itself. Well, housing is definitely a key industry in the U.S., certainly in the past 10, 12 years. That's where most people invested their surplus funds because they believed that, wrongly so, maybe they'll be vindicated because we'll have huge inflation and it'll take everybody out of the trade. But they believed that it was the best place to invest, the way that real estate prices went up over the past decade. But there's a price for everything and there's no pat answers. So 3 areas you want to put your money in the coming couple of years ahead.
I would continue to buy technology stocks and products and services that are strong during recessions, things that people don't cut back on when they're cutting back on other expenses. So, you can still make money in stocks, but you've got to, put a lot of thought into it. Regarding housing, I anticipate some good low prices. And just like during the last recession, housing prices fell like in half or so in Las Vegas. Yes. And then they've since rebounded. So people who bought low actually made a lot of money on their real estate. So hold your cash aside for a couple of years and then start buying low in places that are likely to rebound quicker than other places, maybe houses in very attractive neighborhoods, such as on the North Shore of Long Island, places like that. And I don't know, tell me, I think this is a good time for you to step in and talk about gold and silver. And because people are probably wondering, okay, is there a good deal there? I heard silver prices are at a nice uptrend right now.
Oh, yeah. Well, precious metals, I've always felt that you should have a certain holding, not everything, but, diversified insurance policy, if you will. We've seen gold go up 35, 40% over the past year. And nicely, it didn't go straight up, not like a Bitcoin parabolic, spike. What we saw is they advance, then they'd pull back 5, 10%, stay there, consolidate for a few months. Silver is the only commodity in the world that hasn't hit a new high in the past 40 years. And wow. I've always felt, it's been my theory for quite some time, and somebody explained to me why I was right, is that once gold breaks the key $1,750 an ounce level, and I won't get into the reasons, silver is going to take off with it. And, it just, we should be seeing major inflation. That's one thing we didn't talk about. What's your feeling about inflation, Crista?
I think it's a little too much of a wild card for me to venture in that area right now. I think different kinds of prices could go in different directions. Like like housing prices could fall, but other things that are in greater demand could rise. So I'm going to stay on the sidelines on that topic.
All right. We can have this situation like we had in the Great Recession where the things that you need go up in price, like insurance, like food for a while went up. And then the things that you want, like autos, like a nice new home or whatever, they could be falling in price. So you can have this kind of stagflation. I think stagflation is probably in the offing, but like I say, I'm not the expert. If I knew all this ahead of time, but like I say, the fact that it happened is certainly not a surprise. And so these sectors. Yeah, technology for sure, because whatever happens, technology is going to move forward. And interestingly enough, the products that it takes to create the raw materials that it takes to produce the technological items are all kind of depressed right now, like copper, all the base metals, silver. Silver is like vital for all technologies. We know it. Without silver, we wouldn't have iPhones or computers or anything else. So silver is probably a good bet that it's not going to go down further from here. It's already, even at these current prices, which are somewhat up from where they were a month or two ago, it's still not economical for many silver-only mines to produce. So that's my 2 cents. Anyway, people want to find out more about you, Crista, and connect with you on the web. What's the best way to do that?
They can send me emails from the website at cabotwealth.com. Cabot is CABOT. They can find me on Twitter at Crista Huff. Crista does not have an H, so it's easy to spell it without the H. And lastly, for traders, I would be buying shares of investment, insurance, and annuity companies. Right now, they are all showing recent cup and handle patterns. They appear immediately ready to rise, and there are many healthy companies in that area. So, and then I would be extraordinarily cautious on retail apparel. I think a lot of those companies will literally go out of business.
Yeah, no doubt. We're overstored in this country and probably should be staying away from buying mall REITs and commercial real estate REITs, like you said. Anyways, that's it for now. So questions or comments, why don't you send me an email where you think things are heading, where you think the economy is heading. We'd love to know your opinion. The email address is kl@kerrylutz.com, kl@kerrylutz.com, Twitter feed at Kerry Lutz, and of course, our main website, financialsurvivalnetwork.com. Crista, always a pleasure. We'll talk to you again real soon.
Perfect. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.